All right. So, good afternoon, everyone. Thank you for joining us today for the third session of the third day of Eureka Mentoring Week. Today, we have a fireside chat on the topic of working with fintech, where we have two people over from Deutsche Bank, and we have Ankur moderating the session. So, I will introduce all three of them to you, and then we can move on with the session. So, Ankur is a former entrepreneur with a career spanning over 7 years, most of which has been in the BFSI domain. After starting his banking career with Accelerated, he moved on to a fintech startup where he was responsible for building the enterprise vertical in the payment space. Currently, he is heading the new banking product at FingPay, a startup working towards financial inclusion and serving the underserved segment, my bad. Being a fintech enthusiast with a degree in design thinking, Ankur is an avid problem solver and occasionally likes writing about finance. Next, we have Mr. Viril Thakker. So, Viril's focus area at work is to ensure that Deutsche Bank's corporate clients remain at the forefront of digital adoption, whether across banking, treasury, and other adjacent business processes. Prior to joining Deutsche Bank, Viral has worked with ICICI, HSBC, and JP Morgan for over 13 years across cash management and trade finance, taking a break thereafter to build his own startup. His startup experience saw him build an e-commerce marketplace, delving in the usual rigmarole of building a team, a product, UI and UX, finding investors, and also finding customers. Before he decided to transition back to corporate banking, a CA by education, Viral manages Western India sales for corporate cash management MNC clients at Deutsche Bank. Next up, we have Mr. Ash Malik. So, Ash has worked for more than 20 years within investment banking and has extensive front, middle, and back office experience performing the roles of delivery, strategist, and architect for major change and technology transformation programs across multiple verticals. Ash has a track record of building and sustaining world class engineering organizations, and over the past 6 years, Ash has led technology for the India centers, driving IP repatriation, technical and functional excellence, and collaboration to drive innovation. In parallel, as the CIO for HR Legal Communications, Ash drove the product and technology strategy, delivering digitalization through co creation, including the global implementation of Workday.
Piyush, so thanks a lot for the wonderful introduction. Good afternoon, everybody. I hope the audience is not very sleepy considering this is a post-lunch session. Even if you are, we try and keep it as interesting as possible. So, as we all know, the topic of this chat is fintech, and we have with us two experienced bankers from Deutsche Bank, Ash and Viral, with whom we'll be interacting and learning more about the industry and the upcoming trends. So, welcome Ash, welcome Viral.
Thank you.
Just to brief the audience on the format, we'll have a discussion for about half an hour, and then we'll open it up for Q&A. In case you have any questions, you can just keep a note of it, and we take it up after the session. So, Ash, let's start with you. We'd just like to understand what is Deutsche Bank's view on fintech.
Ankur, thanks. And as we start, I'd like to say thank you to everybody on the call and wish them the best of health and safety for all of them and all their families. To your question, our view is actually quite straightforward, right? So fintechs and fintech innovation, we see as a constant positive force for the future. So it's not a fad, it's not a blip, it's here long term. And even though fintechs and these huge digital ecosystems have entered the market with a bang in the last few years, our view is that they will need alliances with banks. And they'll need alliances because they need to maintain their positions that they've created, but also to meet their long-term regulatory and investment needs. And at the same time, from a bank perspective, and I can put my heart here and say, banks have been caught napping, and we're under increasing pressure to innovate and improve our bottom lines. And there's lots of lessons that we've had to learn. And they are certainly around client centricity, agility, time to market, and innovation. That is the holy grail, which we're all after now. So in summary, what I'd say is that rather than competing, we see working with fintechs in a collaborative way as a critical opportunity. And some people might even say it's necessity, actually, for survival, and that we've got to leverage each other's strengths. And what I do really see is an opportunity in the B2B space, big time. And this could be, quite simply, a niche service provider fintech who has that ability, and it could be linking up with Deutsche Bank scale and access to customers. But certainly by combining the strengths, we have a much higher probability of creating what we would call a sustainable business model, which is what Deutsche Bank is really all about.
So yeah, a couple of years back, we've seen a lot of a fintech startup versus a bank. But over the years, we've seen that that is evolving, and a lot of there's a lot of synergy between both. So they have to work in tandem to achieve some goal together. So, what are your thoughts on building the fintech ecosystem overall?
That's a really good and important question, to be honest. And I think I mentioned sustainable business models, and when you think about business models like that and creating value for customers, or improving the global and local economies, you can't do that without considering fintech ecosystems. And although fintechs are the heart of the ecosystem, we got to also appreciate that banks can play a make or break role, in that development. And certainly, again, I'll mention the B2B space, which I think is really ripe for opportunity. The thing for me is that banks, they have to do what their true purpose was and always has been, which is they have a responsibility, to channel resources into the right areas to help drive the economies. And that's through processes such as, the movement of goods, financing that, through investment, through innovation, job creation, and so on and so forth. Alongside all of that, I think when I look at fintech ecosystems, and this is a big mindset shift for banks specifically, there are 4 behaviors or characteristics that I think we need to see for success. One is, you hope to see co-creation. 2, you hope to see mentoring. 3 is partnering, and 4, investing. And you need to see, one of those or all 4 of those visibly. And one of the ways that Deutsche Bank does it is that we have our Deutsche Bank innovation labs, which are now available in every continent around the world. And these innovation labs are really a simple mechanism for connecting any fintech, any startup to the real decision makers within Deutsche Bank, and start to create that whole ecosystem. But before I hand back to you, Ankur, I just want to highlight, I think there are 3 critical macro level enablers as well that are really important to developing ecosystems for the fintech world. One is the talent, and talent where, for the founding teams, the founders themselves, they have to have longevity, and they're really crucial. And, just talent as a whole, I think from an India perspective, we've seen over the years what you might call a brain drain, and we have to stop that from happening. And also, we have to be able to attract more diverse international talent into India and into the ecosystem. The second, I think, critical macro level enabler is capital, and you have to have different types of capital available. And again, this is where banks can play a large part, but it's not just the banks. And that capital has to be accessible clearly at the various stages of maturity of your fintech. So whether it's at the initial seeding stages of the growth or sustainability. But alongside that, you also need to have other factors, and we need to see, the angel investment networks develop a lot more. We need the government to play a larger part and grant subsidies and so on and so forth. And finally, I'd say that, and this may be a little bit more contentious, is that I think that there must be a demand from customers for that product or that service or that solution. And if it isn't there already, it must emerge really quickly. And you want that demand ideally to be global, And if it's not global, it must be at least local or regional. And I think one of the things we have to address, and I think going forward, and this is really important as we move forward, is these local global conflicts are becoming increasingly important. And this is where we need the regulators and the government to work together, really cooperate, and to help create an environment where sensitive issues such as data and ethics for AI are addressed. So I think that's just my thoughts, but I appreciate it. Somewhere in there, there's a bit of contentious comments.
So one interesting point that you brought in was that there's a lot of scope and a lot of opportunity in the B2B space. However, we are seeing that the Indian market is more focused towards retail products when it comes to fintech. So, Viral, if I could have your views on this.
Yeah, thanks. Thank you so much. So I think I would just say that whatever is seen is not always the truth, right? So we all know people working in the startup ecosystem that there is a lot of hype, right? So I think what we see in the outside and what gets more glory, more eyeballs, more attention, and also maybe more valuation is products focusing on the retail customers. And I think to an extent justifiably so, because the scale of impact and the visibility is straight away there when these products and solutions are targeted towards individuals like you and me. But like I mentioned, not everything is the truth. So there is a lot of work going within the fintech world where solutions and products are developed for, say, backend processes or business adjacent processes from a treasury, banking, and corporate perspective, right? So let me give you a couple of simple use case to make this point. So, for example, all large companies, predominantly MNCs, but also Indian large conglomerates, everyone has to onboard their vendors and customers after doing a reasonable level of due diligence to ensure that they're dealing with sound counterparties. And the traditional world, it takes anything like, say, 7 days, 10 days, 15 days to even 30 days. And today there are solutions available with the help of fintechs, which helps cut down this time by as much as 75 to 80%. Or a second use case, when you see that insurance company is promising to you and me that you file an insurance claim, put some photos of your car accident, and will reimburse the insurance claim in, say, as in will fulfill the insurance claim in, say, less than 10 minutes. Who's doing the hard work at the back end? A lot of these processes are bought by fintech, and there's a couple of use cases where a lot of work is happening in the B2B, but many of these use cases does not have the same visibility as maybe available in the retail market. So I think all in all, there is a lot of work that is happening. There are similar workflow solutions available across treasury, across banking. Say in the MSME space, Government of India announced loans to SMEs and SMBs within 59 minutes. So who is doing the work at the back end when you can get access to these loans in 59 minutes? There is some fintech who is enabling the entire workflow to ensure that a decision can be reached faster. Right. So I think this is some of the use cases where work is happening, but yeah, maybe not. This is not visible to everyone.
So it's just not in the limelight. I mean, there is a lot of work that's
Yes.
happening. It's just that the cool startups are the ones that are more in the limelight are the retail ones.
Yeah.
Okay, Ash, coming back to you, if we could understand, how is Deutsche Bank collaborating with fintech players in terms of, say, technology support or investments or any other form of partnership?
Yeah, I mean, there's a number of ways in which we initially engage with fintechs, but ultimately we then would hopefully result in a relationship that's based on one of the 4 criteria mentioned earlier, which is co-creation, mentoring, partnering, or investing in the firm. I touched on the one of the ways already, which is the DB Labs, where we actually, once we're connected with the fintech, we can then evaluate and test any concept, any technology, any opportunity, and then take the appropriate action forward to roll it into one of those models. The other thing that's happened a few years back is that DB created a separate entity called Breaking Waves, which is slightly decoupled from Deutsche Bank, but is integral to Deutsche Bank, which allows us to build software products with the same speed, creativity, and collaboration of a fintech. And arguably, you can say Breaking Waves is a fintech inside Deutsche Bank. And the thing that actually, the third thing I mentioned is the one that excites me a lot, is that Deutsche Bank has accelerated its own open platform, or its platform business, over the last couple of years, to the creation of DB APIs. And that lets any client, any business, any fintechs, obviously once it's been verified, to use Deutsche Bank data. And you can use that data to create personalized applications, to create new digital services, or even enhance existing ones. Ankur touched on some examples. I'll give you another example where a few months back, we announced a partnership with a fintech called Airwallex, which is basically a fintech that provides API-enabled FX services in Asia. And the advantage of this fintech, which is really fantastic, is that it means that our customers, our Deutsche Bank customers, don't need to open accounts in the countries where their customers are based. So it's a fantastic win for our customers. And finally, I think it would go amiss if I didn't mention, although it's very early days, is going to be our relationship with Google going forwards, which will definitely increase our collaboration and our ability to work with fintechs. So, for example, we're already looking to leverage Apigee and how we'll integrate with fintechs going forward, and that should help with our speed and scale tremendously. But at the other end of the scale, there'll be other opportunities, and you can imagine a scenario where we could go to a fintech, or a fintech could come to us, and we could host their solution on GCP. And there's obviously downsides to that, which is the loss of flexibility, the loss of power of one. We look at software, but the advantages of proximity, the access to our data, and access to our customers may outweigh that. So these are just a few examples of how we're collaborating, but I see these models increasing almost exponentially over the next 24 months.
That's interesting. So there has been a lot of hue and cry about the whole PSD2 norms and open banking recently, especially Europe, and it has also come to India now. So, Viral, if you could, brief the audience here about open banking, and what are the kind of challenges that banks are facing today with regards to open banking?
Yeah. So I think I'll just come to open banking in a minute. I would just add one or two points to what Ash just said, right? So while working and collaborating with fintech, we also provide them market access in a certain way. So for some solutions that bank themselves may not be able to provide, we also work with fintechs to give them market access. And also, when banks work with fintech, we bring a very rich understanding of the customer's processes and all, which further eases the journey of fintechs when marketing their solutions. That is also just adding one or two points. Now, coming to open banking, yeah. So I think at the base, open banking is the practice of providing all the customers' data about banking, transactional, financial data, etc., to say third-party service providers, who then can work on this data to bring better product and services to the customers. But the same data can also potentially be used by banks themselves and the third-party providers for their own different use cases. That is what open banking is at the core. So now, what's the implication of this, right? So how? So this is said to be a big source of innovation, and the reason is that now banks and NBFIs cannot any longer say that data is the new oil and my data is my alone, right? And that is where the innovation opens up. Data was said to be the new oil, but it is never truly data alone as the new oil. It's only a crude oil, right? Unless you refine it, there is no value attached to this data. So the refined data is the oil. Now the challenges for traditional banking is that if they themselves do not start making sense of this data to innovate and bring better products and services, someone else is going to end up doing it for them, right? And that in turn means there is increased competition. I think any which ways, startups and fintechs, they always had an upper hand. They used to wow the customer with the customer experience and the customer journey, whereas a bank will be a slow, steady kind of experience that they will be able to provide to the customers. So now with this innovation, uh, they can innovate on the product and the service. But there is also opportunity for traditional banking over here. The opportunity is that banks themselves also get access to the data. So that traditionally a bank had access to only that much of the data that a customer used to have by banking with the bank, right? So now, in under some regulatory framework, banks can also have access to customers' data, the data which customer is banking with some other banks and some other NBFCs, and that is where a big opportunity. Lastly, banks also have a big cover in addition to the opportunity that I just underlined. The cover that the banks have is that banks traditionally are much more trusted entities, and they are more trusted entities because they are more governed. The number of compliances that a bank has to do are much more than say a third party service provider. So I think these are some of the points. I think I would just like to add the last point, that what it means for the customer. So what it means for the customer is that they definitely will have access to say better products and services, but it also means that now their data is out there in the open. It is much more scattered. And when your data is much more scattered, there is also the underlying risk that comes with data being available with more and more third parties out there. So I hope that gives some color on the point.
So that's an interesting analogy which you drew on the crude oil and the data which needs to be mined. Only after that it is worth it. Uh, are there any other use cases, apart from payments in open banking? Is there anything that you see happening now or coming up later?
Yeah. So I think you are already working on newer banking, and I think you want more and more use cases to enrich your own business per se somewhere, right? But yeah, so I think there are many use cases. So I think let's sample a few over here. So one is open banking is not new to India. If I say that open banking existed for last 20 years, it may sound like crazy, but this is just a new word. So, for example, one of the earliest use cases of open banking, let's say CIBIL, right? So all the banks used to give your credit data to CIBIL, and then CIBIL used to provide this data to a bank or a lender when a customer freshly approached them for a new loan product or a new credit card, right? So I think that is one of the earliest use case of open banking per se in some way. I think for the past few years, I've been using something else called a consolidated statement that CAMS and Carvi has come together for the purpose of mutual fund. There is another excellent use case. Every year, when I have to track my mutual fund investments or for income tax filing, I will always get access to this single consolidated statement instead of getting the statement from say 5 or 10 mutual fund houses where I would have done my investments. So that's the second use case that existed. Now, some of the upcoming use cases, say extending the CIBIL case, right? So CIBIL has data only about your credit score, which means it is related to credit products like say different kind of loans, personal loan, housing loan, or credit card usage. But as you may know, for majority of Indians, we believe in saving and not borrowing so much. So this is only partial data that CIBIL has, right? What about the data related to savings, and hence whether there is a scope to enrich this financial score instead of only a CIBIL or a credit score of a customer? So this is one simple use case. How about insurance, right? So if you can collate all the data from my bank statements, from all the assets that I own, whether a house, a car, etc., my income statements basis TDS data available with the income tax authority, and basis that you drop a much enriched profile and then tell me whether I'm underinsured basis my holistic profile, a 360-degree profile, or whether for basis all this profile, whether I can get a better insurance premium deal elsewhere, right? So second use case going over there. We already see the new models around digital lending, which are say cash flow based, right? So for a SME, you determine their cash flow basis, say GST returns that they've filed, and there are pipes available where you can get access to that data. Then basis the revenue, you can give them say mini credits, which are typically not tapped into by say the NBFCs and the banks traditionally. Or we hear and see use cases around say use cases around credit cards which are made specifically for startups and small and micro businesses, right? So there are tons of this business use cases out there, and these are all nothing to do with payments. So I think payments is, yes, one important part. It has one of the largest impact. I think UPI and QR have been two game changers over the last 3-4 years. Demonetization fueled it, but there is a lot of use cases even going beyond the payments alone.
Wow. So you've given me a lot of products that I can work on now for our neo banking app. But jokes apart, but jokes apart, the core of all of this is eventually an API. So, like Ash also mentioned, Deutsche Bank also gives a lot of APIs for fintechs to implement. Uh, so, Peter, what are the current and the future trends that you see in API banking?
Okay, so I believe API banking is like say loosely used as to mean open banking or neo banking. So I would want to decouple API banking into two parts. One is API banking from an open banking perspective, and we already spoke at length about the kind of use cases that are available, right? So I think all those use cases, many of them are futuristic, and I can keep talking and talking about those use cases. So I think uh, those use cases, yes, it starts always with the consumer facing for the reasons that we already discussed earlier. But there are use cases within the corporate and enterprise side also. Uh, I think I would also like to touch upon that API banking also means APIs that banks can directly today connect with the corporate customers who are banking with them, right? And Deutsche Bank, through their own APIs, has the ability today to directly connect with our corporate customers, our institutional customers, and provide access to financial information on a 24 by 7 by 365 basis. Now, traditionally, if you see, say, let's take the simplest example, any corporate or a treasury person from a corporate institutional banking perspective accesses their data, say, once or twice a day, based on the bank statement that bank sends to their ERP. API is a game changer where the information is sent relentlessly 24 by 7 by 365, whether it's a Saturday, a Sunday, a non-working day, or it's non-banking hours, 7 o'clock, 8 o'clock, 9 o'clock, 11 o'clock, 12 o'clock, anytime in the night. And access to this financial information inherently always means better business decisions, because now you know that, yes, so and so has already paid my money. I can release the credit limit and dispatch my goods faster to my counterparty, or I can enable my workflows, make it manual independent, automate, make it efficient, and ensure that in the traditional world, if my dealer used to call me and I used to have a call center who will answer that, yes, money received, goods dispatched, this kind of things now can be automated where dealers can simply send a SMS or an email, and through my API handshake and the follow-on workflows that a corporate has incorporated, corporates can get going with their business faster, right? So there is no need that whether someone is coming on a Saturday, Sunday, or after. If I have not paid by Friday, my next dispatch can happen only on a Monday. This kind of use cases are going away, and I think that is also a bigger impact that API banking is bringing to the corporate and the institutional customers.
So, just one last question for Ash, and then we'll open this up for Q&A. Ash, could you highlight a few investments in the fintech ecosystem which are in the public domain?
Ankur, yeah, sure. I'll just highlight three specifically. One is Contiguous, which was a Mumbai-based software house. We acquired it 100%, including the founder, CEO, and the whole talent came along with it. And our strategy there was quite simple. It was to accelerate the development of our open banking platform. And ultimately, it's all about getting to market quicker. A second example I give is Finance Guru. And this is interesting because here the relationship developed over time. Finance Guru basically used our open banking platform to develop its services and its products. And through that, we then started to, we agreed to provide seed funding and then additional growth funding and so on and so forth. And essentially, it's a financial assistant which helps customers with managing their income, their expenses, and their utilities. So that's just another example of where we provided the funding for a growing fintech. And I'll give one more example, which is Deposit Solutions, which again is just very recent, where we've just acquired a 5% stake. So we're the only additional, outside the owners, we're the only additional stakeholder in that company. And this is a really good case study because Deposit Solutions enables Deutsche Bank customers to access fixed income deposits from other European banks, i.e. third parties, that pay higher interest rates. And if you think about that, that for me is a fabulous win-win scenario, because it's a win-win for the customer because they get access to the best product, or in this case, the best interest rates. It's a win for Deutsche Bank because we deepen and strengthen our relationships with our customers, offering them access to better products. Fintechs obviously benefit from that arrangement, and finally, the third party also benefits because in that example, the reason they're paying high interest rates is because they need the cash. And this, for me, is a classic example of how relationship with fintechs and fintech ecosystem will develop, and it also highlights the different ways that Deutsche Bank does invest in fintechs. So hopefully that gives you a feel.
Yeah, it's good to hear that Deutsche is investing in a lot of fintech players and to help the entire ecosystem grow. So, well, I can keep going. I have a lot of questions otherwise, but due to lack of time, I think we can take a few questions from the audience. So, Piyush, how do we do this? Do they post it in the chat, or do we invite people from the audience to ask questions?
We've been doing both of them. They can start leaving their questions in the chat, and if they feel that the question needs to be elaborated more, then we can invite them up on the stage.
Okay. So, does anybody in the audience have questions? Because there's another interesting question which I would have asked if nobody else would have. People want to know, Amit wants to know the difference between an account aggregator and open banking. So, Viral, probably you can take this question.
So I think there's no difference. I would say account aggregator is first right step that RBI has done. In late 2018, they gave out 5 licenses to account aggregators, and I think RBI is just trying to formalize open banking in certain way. So I think under that license and under that framework, they've defined the kind of data that can be shared. What are the governance framework around it? For example, that it needs to be with customers' consent and so on and so forth. So I do not think there is too much of a difference. It's just a formal framework that RBI is trying to set, because, like I mentioned previously, with open banking, the customer's data can be scattered and also can be at risk and can be misused. We already see so much of data theft happening, and I think sometime back we heard about big basket data being leaked, before that about Zomato and so on and so forth. So financial data is even more valuable, so to speak, right? So I think this is a formal framework that they're putting around it, and RBI has also defined formal technical specifications around some of the work that can be undertaken.
So right now it's voluntary for banks to join the account aggregator ecosystem. Do you think that is going to be helpful for building the entire framework, or do you think there should be some sort of regulation for making it mandatory to expose?
So my personal sense over there is that most banks would have, say, traditional and legacy technical architecture, and it's not more about regulations alone. So to give you an analogy in a different context, over the last few months or a year, RBI first made NEFT 24/7. Then on December 14th, it has gone live with RTGS on a 24/7 basis. And from January 1st, it is launching a positive pay system for checks. So this kind of technological changes, it is not easy for the entire banking system to digest and upgrade overnight. So I think it's a matter of one is say technological capabilities of all the banks to gradually upgrade and come to a level where this can then be made open and mandatory for everyone. This is one part of it. Also, I think the second part of it is that since we are dealing with financial data, we are dealing with so much money and data around that. It is also very important for a lot of practices and governance framework to evolve, including practices around the risk, the checks and balance controls, audit framework, compliance, certification, and so on and so forth. And I think hence, for something like that, it is deliberate that RBI wants to be gradual. So banks who are already leading in the space, they will be the early movers. They will adopt a lot of practices. So if I'm not wrong, so for example, ICICI Bank has already, in collaboration with someone, started their open banking venture, right? So there will be banks who will take a leapfrog and evolve, put their minds, put brains around the entire process, brainstorm and take a first move advantage. And then there will be others who will straight away adopt to the current contemporary benchmark so that they don't have to go through the entire learning curve. Right? They already upgrade to what is given, what is known, and what works. So I think that's where lies the answer. So yeah, like anything, it's a evolution process.
Do you see?
Viral, I have a question for you. Sorry, I had a quick question, but do you not think that the open banking it starts with regulations, but ultimately it's a competitive advantage. So over time, you will have to adopt open banking, otherwise you're not going to survive. It just needs a kickstart with regulation.
Yeah. So that's why I said that it's the right first step that RBI took in late 2018 by formally handing over licenses to account aggregators, which is the Indian framework equivalent of open banking, right? So RBI has already started that. I think they floated early notifications 2-3 years earlier than 2018, and then I think somewhere in November 18 they already gave away licenses. So RBI is already making the first step. The beauty of innovation is it is very difficult to keep pace with, as in regulators find it very difficult to keep pace with innovation, right? So innovation happens and the regulators play a catch-up game. So yeah.
So basically, I guess a couple of years down the line, account aggregation is going to be more of a hygiene factor than than anything else. It's something that everybody will have to do because otherwise you don't get that competitive edge.
Yeah, quite possible. So what could end up happening is that banks who are not providing this to their customers, the customers may not start selecting those banks in the first place. If your customer is not going to come to you, right, because the customer is looking for a competitive advantage, he's looking for a better product and a service. Like I told you about the under insurance and the better deal, better premium on the insurance, right? So something like that example. So if an insurance company is not participating in the open banking framework, then I may not want to be working with them, and the same may happen for traditional banking also, right? If my bank is not participating in the open banking framework, I'll say, hey, look, you're not the best bank because I'm not able to leverage my data and gain out of that. So I think yeah, you're right. Whether it happens in 2 years or 5 years, I think it will evolve, but that's the path, of course.
Okay, so we've got a few more questions. Let's take one from Piyali. She's asking that our startup requires to tie up with banks to deliver our services. What is the best way to partner with banks? Because we are facing this challenge as a new fintech startup.
I think it's a. As in, you want me to take it, or Ash, you want to take that?
You're welcome. I think it's a local question.
Okay. So my sense is it's a traditional sales thing, right? So one is a warm reference helps. Secondly, studying studying the different banks and their practices and their scope of participation with fintech. That is what helps. That is the second thing. And the third and the most critical, I think one of the things that Ash also touched upon, the kind of service you are providing, there needs to be a demand for that. If there is no demand for that, if it is not showing true value add, then banks are not going to be wanting to work with you, right? So as simple as that. So I think find a warm reference who can open doors for you. Study the competitive landscape better, that which are the banks which are taking keen interest to partner with fintechs. Deutsche Bank is definitely one of them. So we have our own model of evaluating on how we can tie up with fintechs and what kind of products and services benefits either us in terms of our processes or benefits our corporates and institutional clients. So we definitely work. So I think you study that landscape, and then the third point, that it should actually add value to someone, so that someone will open their doors for you.
Yeah, Ankur, Ankur, if you don't mind, just add to Viral's point there. It's just, I totally agree with you, by the way, 100% agree. And from a fintech perspective, one of the things that banks are always interested in, obviously, is your business model and your forecast for your own success and everything else. But what's been difficult historically is the ability to forecast what your revenues will be in the future. Most successful fintechs have forecasting is very poor. And banks and other investors have realized that. So what they're really looking for now is the founders, and it goes back to Viral's point. It goes back to the founders being very convincing in their knowledge and their expertise of the area in which they're operating. They are fundamentally the one thing that will win over banks to partner. And if they can be compelling and they can describe how the world could look like in the future and the role that banks will play, then the banks are open to understanding that actually the revenue streams could be different in the future, but they see the opportunity. And I think that's something that a lot of the founders aren't doing as well as they should. And I go back to Will's point, getting references and that sort of support would help a lot.
The value add is something that majorly the fintech has to focus on. If they're adding some value, so really, I think that answers your question.
Right.
We'll just take the last two questions before we wrap up. There's a question from Sanket. He asks, how do you see the alternative asset management in India in the next 10 years? And how big could be the market for the fintech industry? So I think we probably have to brief them on what alternative asset management is for the others also. And then we can, either of you can take this question to see how do you see it in the next 10 years.
Yeah, Ash, you want to take a go at that?
To be honest, I'm not that familiar with the alternative asset management. I mean, my view is ultimately for me, I go back to my earlier point, which is if you don't have demand. See, if I look at historically, the fintechs that have not been successful clearly are the ones that have a good product or they have a good service, but they can't identify the customer. They just cannot get the demand. And until you get that demand, so Ankur, I know I've read some of your papers. I just don't believe in the build it and they will come approach. You have to create the demand. So in this instance, I'm not an expert, to be honest with you, in the asset management space. But what we have seen is that predictions where it's successful are nowhere near what happens in the end. They are order of magnitude too low. In other words, the fintechs that are successful are way, way, way bigger than anything they predicted at the outset. So how do I see it develop in the next 10 years? I honestly can't tell you, other than saying that it probably is, whatever you imagine it to be, it's probably going to be a factor of 10 times bigger, because that's what the evidence tells you when you study some of the successful fintechs, how wrong they were in their predictions. But honestly, other than that, I can't really add specifically around this business. Not in India.
So, I can just add additional perspective to that. So I think alternative investment, again, one of those terms which could be interpreted in many different ways. But I would say just because of data and internet, we are at an inflection point in general. The reason I say is that I think we are at the cusp of this inflection point because the financial literacy will just improve beyond the magnitude that was there previously. I think we could have data, internet, natural language processing. Uh, all apps are going more and more vernacular. So as financial literacy will improve, the adoption rate will improve. If you see alternate investment, you can call many things. Like, so for example, I'm aware about startups trying to work in the passive investing space or a goal-oriented investing space, even as basic as peer-to-peer lending, where someone gets a higher rate of interest than what you get when you park your money with a bank, or even as basic as capital markets in terms of what the Zerodha did, or parking smaller money in the form of small case that is like very very small value that you can invest in stocks. It's also, I think, if you broaden the horizon, I think many new use cases are continuously coming up, and still we are just getting started because the market is where it is at the level of financial literacy that we have. As data explodes, as internet explodes, as more and more literacy can be given in vernacular medium, I think this will just go beyond anyone's imagination.
Okay. So there is one interesting question. I think it's the last one that we'll take. Unless Piyush, do we have some more time for a few more questions, or can we take this as the last question?
We have 10-15 minutes if you want to take up more
Okay.
questions.
Okay. So we'll take one or two more questions. One interesting question is on cryptocurrency. Do you see the cryptocurrency disrupting the fintech market? And what is the role of the policies, regulations, and compliances to make crypto assets reliable? This is like a hot
That's a good
topic.
question. It is a hot topic, that one. Look, I'm a big fan of cryptocurrencies. I'm a big fan of distributed ledgers, but I think there's a long way to go before this really becomes at scale, simply because the macro level discussions are too important. You know, the central banks, the governments, they have too much at stake. So at the moment, you're seeing, you know, crypto development in pockets, and yeah, and there will be opportunities to utilize, you know, digital assets. There will be opportunities to make you know, things work. But if you want cryptocurrency at a global level, there is a lot of work that has to happen at the macro level, which I think at the moment we're seeing an era where, if you look at it, what we're doing, we're becoming more and more local. So globalization seems to have finished, and we tend to be moving back to localization. I'm sure at some point that will reverse, and that's, for me, is when you really get cryptocurrencies taking off. But so I'm a big fan, but I just think it's a little bit early. And Deutsche Bank's official position is to watch this space and get involved, but it is not there at the leading edge of cryptocurrency development. Viral, over to you. Your thoughts would be interesting.
I think very similar views. You have already explained it very well, so not much to add. I think you said it already explained it very well.
Okay.
So what about the regulations? I mean, the regulations are still pretty gray about cryptocurrencies. So where do you see that heading in the near future?
See, Ankur, at the moment, like, so the regulations. Okay, let me go back one step. Today, there are two big driving forces in the way the financial sector works. First is the governments and their regulations of what they're trying to do. Secondly is the corporates and the banking institutions themselves. And this is all about driving bottom line. And it's about driving bottom line profits. And at the moment, for me, what I see is that I see crypto being built in the same way as our society and the way the financial services work today. But if you think about it, we're in a world of negative interest rates, which we're trying hard to fathom. What does it really mean in the future? You know, what will the world develop into? But we're building our cryptocurrency models actually the same way, but something has to shift. And I think that's where the regulations and compliance need to come in. They need to innovate. They need to rethink about how cryptocurrencies will work and change those policies and regulations, because it will not take off cross-border. I mean, I'd love someone to prove me wrong, but at a scale, it will not take off cross-border, and it will become a corporate level consumer development rather than a truly global cryptocurrency. So I think they've got massive roles to play, but I can't see it being solved in the next 2 to 3 years.
I guess we need to wait and watch. Rahul, probably we'll have to just wait and watch where this goes.
I mean, look, the Bitcoin discussion, right? There's a lot of discussion going about Bitcoin, how to manage Bitcoin, where is it going, and the prices of Bitcoin, they seem astronomical. I like the idea of Bitcoin, but I do think that the foundations, the premises on which it's based is too similar to today's financial services industry, to today's capitalist model. It needs to change slightly to make it sustainable. It can't be the same thing, cashless in digital assets. I think that's the change that has to happen.
Hey, sorry, some network issue, and
welcome back.
Yeah. So
some network issue, but I've been getting a pop-up that I'll be logged out in the next 10 minutes or something. I don't know whether it's only on my screen or something, but I'm getting this pop-up that in the next 10 minutes I'll be forcibly logged out or something.
Yes,
yeah,
I'm getting it too.
At 3 p.m. So it'll be best to wrap up soon.
Great. So, like I said, I mean, we can continue this all day. There are a lot of questions. This has been a very interesting conversation. But due to lack of time, we have to probably wrap up now. So, thank you, Ash. Thank you, Viral. It was a very interesting conversation. And it's very good to see the kind of ecosystem that Deutsche Bank is creating for fintechs in India. We're pretty sure that with this kind of support and with the kind of human talent that is there at Deutsche, the Indian fintech sector is going to see some phenomenal growth in the coming few years.
Thank you.
Thank you so much, Ankur. Pleasure talking, and I think we can keep the discussion going offline if there are comments in chats or something as the event gets live broadcasted or something, right? So that could be offline. But thanks, wonderful moderation. Thanks to you also to have both of us here and do such a fantastic job out of that.
Yeah, I'll echo Viral's comments. Thank you so much, Ankur. Fantastic talking to you. And watch this space with Deutsche, especially in India. I think the next 24 months are going to be very interesting.
Absolutely. Thank you so much.
Great. Thank you.
Thanks. Bye to all. Stay safe. Stay healthy.
Take care.
Bye.
Bye.
Bye. Bye.